My opinion on why the Bitcoin market is acting different this 4-year cycle. Good morning, good afternoon, good evening guys, wherever you are on this beautiful world, whenever you're watching this video. Welcome to the Bitcoin family channel. For newcomers, my name is Didi. I need to add a disclaimer. I am not a financial advisor. Everything I say in this video, it's not financial advice. It is my opinion on the Bitcoin market, my opinion on the news. It is my opinion on life and how to live life. So it's not financial advice in any kind of way. There is a disclaimer in the description of the video. Please read the disclaimer so you understand that all the content that I create is no financial advice in any kind of way. Now, in today's video, I'm going to talk about two important news items. I will check 4 amazing charts in which I analyze why I think that this cycle is moving different than the previous cycles, and I will end the video, of course, with an inspirational quote. Bam! First news item, guys, is that the $3 trillion big Goldman Sachs, a Wall Street giant, just admitted that they bought $1.7 billion worth of Bitcoin. So yes, all the Wall Street giants slowly entering this Bitcoin industry as well. $1.7 billion worth of Bitcoin already, guys. Really cool news, of course, for all those people that love to see centralized entities like banks and governments stepping into this crypto world as well. The second news item, again a news item about our beautiful banks, because we all love the banks, is the Central Bank of Czech Republic. They announced they bought Bitcoin to add it to their balance sheet, and they also announced they have no intention of selling those Bitcoins within the next 3 years. So there's the first central bank buying Bitcoin and telling all their customers we are not going to sell these Bitcoins within the next 3 years. Why? Probably because the banks, also Goldman Sachs and other institutional investors, really believe that this cycle is going to be completely different than the previous 4 cycles. They think this is going to be an extended cycle, and not just an extended cycle of 1 or 2 or 3 years, probably an extended cycle for 10 and 20 years, because they really believe that the market is going to move completely different. I am going to give my opinion, my take, my view on that new expected market movements of Bitcoin in the next section of this video with analyzing all the charts. Because yes, I agree they could be right, but I will give my opinion on what I think that the Bitcoin cycle will change into, if it is changing at all. Let me show you this exactly in the charts. Bam! The first chart for today, guys, is this 4-hour chart. Look, we are now above the 91K level line. Amazing, that green horizontal line. The resistance that we are going to face is 94,000 US dollars. We need to break 94 to be able to go to 97. That is the next resistance. If we don't close these bars higher than this previous high, let's say over there, like 95K, this continues to be a downtrend. Low, lower high, lower low. If this is going to be a lower high again, lower than this high, 93, then again it's a downward trend. If this candle is going to close in 4 hours, could close around 94K, then we are breaking this short-term downward trend for the traders. Now, if we zoom out to the 5-day channel, exactly what I told you did happen. We fell down to the bottom of that Gaussian channel. Why? Because we broke that midline. Now, there is support on that bottom of the Gaussian channel. That's why you see this large wick through it, but the body is still above it. $91,804 is the level of the bottom line of the Gaussian channel. Historically, that has been support. If we even look back to the previous bear market, look, it kept support on that bottom line until that we really broke it, and then we shifted from green to red. That caused a drop from 40K all the way to 16K. So the moment the Gaussian channel turns red, there's another confirmation of the bear market to start. Please understand it. Getting into it is very bad. Breaking the midline is even worse. Breaking the bottom line is a triple confirmation of a new bear market. We are talking about a traditional 4-year cycle. I'm going to jump into some other charts later to maybe try and explain why this could be changing. Because if you go to this chart, I told you in the last couple of cycles, this was the way to make profits. You can use the 500-day strategy, the 3-day buy signal strategy, or the 365-day strategy, all in combination with the pi cycle top. At the moment, the only profitable strategy was the 500-day strategy. By 500 days before the halving, 500 days after the halving, you would have turned one Bitcoin that you bought at 16,000 into one Bitcoin worth 123,000 if you would have bought 500 days before and you sold 500 days after. So that would be a nice profit, around 7.4x your capital. That's the only strategy that has worked so far, because the other ones require a pi cycle top, and the pi cycle top hasn't flashed yet. Why didn't it flash? I'm going to talk about that a little bit later in this video. If we look at the monthly chart, guys, I told you in 10 days now we're going to close this candle. It needs to be above that orange line. The orange line already starts to curl downwards. That's also because this candle is now down below it. If we close the candle above that orange line will correct again a little bit more upwards. If we close down below it, another confirmation of a bear market trend. Is it going to be a 70% crash or a 10% crash or a 20% crash? That depends on if the cycle has shifted, yes or no. And I'm going to talk about that in a couple of minutes. If we look at DDAI.app, that's our app where you can see the 30 global heat score indicators, where you can analyze, hey, what is heating up? This one is telling us we are in the midst, we are not like heating up yet. The 2-year MA multiplier, still cool. 3-month annualized ratio, still cool. Altcoin season index, still cool. Bitcoin 4-year cycle, all of them are cool. A few of them are warm. The Bitcoin long-term hollow supply, warm means selling. The Bitcoin dominance, warm means selling. MVRV ratio in the middle, still cool. NUPL, still cool. So the traditional indicators, if we already had a top at 126K, these all should been flashing. They didn't flash. Now the big question is, why didn't they flash if that bull market top is already in? So the question is, even if the bull market top is in, but if it is in, like a lot of people are telling us, why didn't all these traditional indicators help us this time? Why didn't they flash? Because also me, myself, and I, as a non-Bitcoin financial advisor in this market, just a long-haired dude living in Phuket, has always been trusting these indicators. And these indicators are either lagging behind or not working at all anymore. So I'm going to give you my take on that now as well. Even if you go to CoinGlass, you can find all of these indicators. This one is telling us 100% hodl at the moment. Not selling, hodl. So even there, all the indicators are telling us, no, you don't need to sell, you need to hodl. Is it because these indicators are based on the previous 4-year cycle, or is it because the top is still not in? It's a very difficult situation at the moment, but I'm going to try to give my non-Bitcoin advisory view on this. Also, if you look at the Maya multiple, for example, is it normal that we didn't go that high anymore? Do we have like lower tops every time? Over here, the top in 2017 was like 3.7. The top in 2021, 3.3. Is this normal that the top now was 1.8? Is it just a trend? And why is that trend, for example, there in the Bitcoin Maya multiple? I'm going to try and give my take on that now. So first of all, guys, I think that Bitcoin has evolved. You know, the market structure has changed, and most of the classic top indicators that we are using, that I've been using as a non-financial Bitcoin advisor, are built for a different Bitcoin, a different market, maybe a complete different liquidity profile. So the most indicators are lagging here now and not leading anymore. Pi cycle top, MVRV, R hodl, Puel multiple, NUPL, the hash ribbons, the 2-year MA, the Maya multiple, all of them were kind of built on the past cycles or adapted to the past cycles. But what we see now is that the cycles keep getting longer, keep getting flatter, a little bit less explosive. Why? Because the market cap is bigger, the liquidity is deeper, leverage is really more controlled. check what happened after FTX and after China ban. The ETFs have a smooth volatility instead like these euphoria phases. And the minor selling, if we do an analysis of the blockchain, we can see is also slower and more sophisticated. So it's completely changing. All of those indicators are not built for this market that is changing now. All of those indicators that I was trusting, they require an euphoria phase, a phase that we boom, explode up really steeply. And that is why the pi cycle top lines cross, because we have an explosive phase. So most of those indicators that we have been using all require that explosive phase. And that explosive phase hasn't been there because retail is not buying anymore. The market is shifting from retail. To be clear, retail is the people like you, me, your aunt, your nephew, the butcher. That is retail. They don't buy anymore. That market is shifting to the ones that kind of Bitcoin was not created for, to the banks, to the governments, institutional investors, pension funds, huge companies. They start to buy. And they treat the market in a different way than retail, less emotional. So less euphoria, less deep bear markets. So that is one of the reasons I think that is influencing the market. Second of all, the ETFs changed kind of everything. Like before all the ETFs, we had retail mania, blow-off tops, indicators flashed perfectly, etc. After the ETFs, everything slowly grinds, institutional flows. You know, we tried to do it as retail. That is why we had an all-time high before the halving. We never had that before, all-time high before the halving. This time we had it. Why? Because we started to push it as retail because we really believed that these ETFs would be really positive for us. And now we can see they are positive, but in a different way. So the indicators that we trust are barely moving at the moment. Why? Because ETFs, institutional investors, governments, they all accumulate in a very controlled manner. They stabilize the volatility. They reduce extreme overshoots like the euphoria phases. They flatten all the blow-off tops, but they are increasing the baseline demand. So they keep buying, but very slowly, not euphorically, not emotionally. And if you look at the charts, 2013, parabolic move. 2017, when we went all in and selling our house, parabolic move. If you look at 2021, it was a double top. There was no euphoria anymore, it was a double top. If you start to look now at 2025 and see the current top 126 as the top, it was a very rounded top, not even double, not even blow off. Which means the market is getting flatter from euphoria blow-off tops to a double top to now a rounded top. The market is getting flatter. So this means less emotional, retail selling, buying, selling, institutions slowly buying, slowly selling, slowly buying, slowly selling, makes the market move different and makes all the indicators not flash at the moment that they should be flashing. Please understand, I'm not a financial advisor. Everything I say in this video is my personal opinion on the markets, on the indicators, on the movements of the markets. No financial advice. This is not telling you to buy or sell Bitcoin. This is just my opinion on the market. So if you now look at those indicators, they are kind of kept because of the market maturity, not that volatile anymore. So for example, the pi cycle top, this required insane vertical rallies. We don't have insane vertical rallies. The MVRV used to hit like 3.7 and more. We didn't even reach 2.5 to 3.0 at the moment. The NUPL euphoria used to be 0.75 and higher. Now it rarely crosses 0.6. And if we look at the PREL multiple, it used to spike higher than 4 to 6. At the moment, we're happy if it spikes to 2. So there's also an indication that the market is maturing and getting flatter. But we do also see that there is new indicators that start to show us kind of what the market is moving. At the moment, we need to take a look at the funding rates, open interest, liquidations, perpetual swaps, options hedging, volatility selling. All of those are now kind of muting our previous signals, so we need to create new signals that are based on that, on the funding rates, on the open interest, on the liquidations. The new set of indicators need to be built to be adapted to this maturing market, not the euphoria market. All the indicators that we were using were relying on FOMO, fear of missing out, and this new package of indicators that needs to be created should not be relying anymore on FOMO. It should be relying on a maturing market. Now, if you have been watching my videos for multiple years, you also know that in the beginning, 2017 and 21 cycle, I told you guys all, a lot of the selling pressure always comes from the miners, as they were mining Bitcoins, holding the Bitcoins until we saw a blow of top, and then they started to sell the Bitcoins, and by that creating a crash. Now, even the miners have been maturing. They are not selling in that way anymore. They are also now understanding, wow, wait, Bitcoin is becoming exactly what we thought it would become. It would become one of the most important assets of the world. We should not be dumping them anymore like we did before. So they are selling their Bitcoins now into a rally gradually, not dumping anymore, and by that crashing the complete market. Also, the miners have now access, because of all legalizing Bitcoin, to finances. They can make their mining companies bigger because they get loans, etc. Because all the governments and all the institutional investors are now supporting Bitcoin. So the whole industry is shifting to maturing and professionalizing in a way that now everything becomes different. Miners don't need to make shitloads of profits anymore by selling their Bitcoins because they can get loans to build bigger and buy new miners as well. So everything in this market is changing. And that is also the reason why, for example, the 12 multiple or all the other miner signals are not spiking anymore. They're not flashing. You're not telling us, hey, we are overheated. This is the bull market top. Why? Because of what I just told you. The mining industry is also maturing. So Bitcoin is kind of turning into this macro asset now, you know? So the tops will be created because the DXY spikes, or liquidity drains, or rate changes, or recessions, or global events, or ETF redemption cycles. All of that now is influencing the Bitcoin price instead of all the other things that we just mentioned. I'm not a financial advisor. This is all my opinion on what I see happening since I stepped into this industry in 2014. I ran through a couple of cycles and I see that the cycles are changing. I'm not saying that Bitcoin is never going higher again. I'm saying Bitcoin is turning even in a better asset than it was before because now it's backed by a huge market. So for me, it is still the best store of value possible. And that's why our capital as the Bitcoin family is still fully in Bitcoin. And to be clear, I'm not saying that all those indicators are not working anymore, because the guys that build those indicators, they did a pretty damn fine job. But all those indicators are not working for the new sort of Bitcoin cycle anymore. If it is a complete new Bitcoin cycle, those indicators are not working for that anymore. They could still work short-term, mid-term cycles. You know, they can indicate you when to sell and buy back in the short term or in the mid-term, but long-term, 4-year cycle top indicators are not good anymore for the Bitcoin that we see at the moment, to what Bitcoin is evolving at the moment. If we want the traditional indicators to start flashing, I believe Bitcoin needs to go to between 130 and 160,000 US dollars. The moment that Bitcoin will go to that level of 130 to 160, then I believe that the traditional indicators can start flashing again and can start telling us, hey, the market is heating up. So I told you in yesterday's video, 70% of me believes it's already bear market, 30% of me is still hopeful for another push in the bull market. If that 30% is right and we see another push into those levels, 130 to 160, the traditional indicators will start flashing again. But then still the 4-year cycle changed a little bit, because normally the top was in 17 months after the halving. And that was already in October, exactly when 126K was in. So it's very simple. Nobody has a crystal ball. We can't predict the future. We can only analyze the past. We can see that the cycles are changing because the industry is changing from retail to institutional. We can see adoption in governments, countries buying Bitcoin. We can see adoption in banks, allowing their customers to buy Bitcoin, becoming a custodial service. We see the adoption in institutional investors, pension funds, all adding Bitcoin to their reserve strategy. And that is of course changing the industry, and by that we also need to change the indicators that will tell us when the top or when the bottom is in. I'm going to do my best to do a deep dive in all these indicators and guide you again in the next cycle, but I'm still very proud on the fact that this cycle I made a lot of you step into the market at 16K and step out of the market around 100 to 126K, but even telling you now, if you want to take profit, take profit. You did your capital X4. X4 is an amazing result. So the bottom line is the indicators didn't change, the market changed. The indicators are still doing what they did, but the market changed, and that's why the indicators are not flashing at this moment. And we now need to together decide what kind of new market is going to be created by the institutional investors and which indicators fit better to that new market. I'm gonna again do my best to deep dive into it, but you are my community, so you should do the deep dives yourself as well, and let me know down below in the comments what you think, which indicators are gonna be important now in this new type of 4-year cycle. Still a 4-year cycle, halving to halving will still take 4 years. Next halving is 2028, so something is gonna change around that period again, because at that moment the miners will earn less. And yes, they will still have the same fixed cost of mining Bitcoin, so the price should be higher for them to break even. So I still think it has an influence, but there will also be other influences on the market, and we together need to decide as non-financial advisors in this industry where it will go. I hope it is clear what my opinion is on the moment of the market. Sorry for this long video, recording now already for 24 minutes in charts. It will be around 20 minutes, I think, when it's edited, but I hope this is all clear, guys. If you did enjoy this part of the video, then give the video already a thumbs up, share it with your friends and family, subscribe to the channel, and hit the notification bell. And please remember, I'm not a financial advisor, just a guy that is sharing his opinion on the market, in Bitcoin, on the macroeconomics, on everything else. If you do appreciate what I'm doing, then please subscribe to this channel as well, because we want to reach 100K subscribers, of course, during this still bull market or non-bull market. Now, let's jump into the next part. I hope you really enjoyed those charts, guys. Yes, and I hope you also really understand that at the moment it is very difficult for me as a non-financial advisor in this Bitcoin industry to tell you what is exactly going on, as we are experiencing a huge shift from buying people. It was retail. We were making those all-time highs. We were buying so much Bitcoin in the euphoria phase that we had a blow of top. That is now not buying anymore, and that one is shifting into institutional investors that really buy and accumulate slowly, because they are used to buying, accumulate slowly in the past for all the other assets that they bought. So this shift still needs to show what will happen exactly to the Bitcoin cycle. But it is a possibility that we are going to have less euphoria top and less deep bear markets, because Bitcoin is maturing and Bitcoin is slowly grinding higher and higher and higher, which of course makes the dollar cost average strategy the most interesting strategy to apply at the moment. Because we all know when banks, the banks that we love, when the governments that we love, when all the other centralized entities, all the centralized entities that we love, when they start to play the game, they start to play this game probably for the long term, and they will start to accumulate more and more and more of our precious Bitcoins that we love. And in my opinion, we should buy these Bitcoins as well. Let them do their thing, but please be aware that whenever they play a game to make some profits. And I'm referring to the banks that we love, the governments that we love, and all other centralized entities that we love. So in my non-Bitcoin advisor role in this industry, I think we should be smart and hedge our capital in those store of values that are being bought by those centralized entities, because they will slowly let the price increase. So that digital gold of the 21st century Bitcoin will make it possible for you to increase your purchasing power the upcoming years, instead of decreasing your purchasing power because you love euro and dollar so much. You know, the fiat coins that we really love. If you really love fiat coins, stay in them, but please also understand they will decrease your purchasing power because of inflation. If you don't want that to happen, the decreasing of your purchasing power, you should start to save your money in Bitcoin or gold or any other store of value that is increasing your purchasing power. I hope the charts were completely clear. I will keep repeating, I am not a financial advisor. Everything in my video is my opinion and no financial advice as well. So please read also the disclaimer down below in the description, guys. Now let's jump into the last part, the inspirational quote. Before I jump into the inspirational quote, guys, I need to say that tomorrow, the 21st of November, is a very important day for me. First of all, it is the day that my mother passed away, and because of that, last year, exactly on that day, I started a new company, and that company was called Didi Bam Bam. So tomorrow, on that beautiful special day, we are celebrating also the 1-year anniversary of Didi Bam Bam. And to celebrate the Didi Bam Bam 1-year anniversary, we are gonna do a really cool thing. So please check our socials and do what I ask you on those socials, because if you do that repost, if you do that like, if you tag some friends, you will be able to get access to the Didi Bam Bam AI app, guys, for free for up to 12 months as a gold VIP member. So it's really cool what we are gonna do for the community. So please check our socials tomorrow on the 21st of November, the 1-year anniversary of Didi Bam Bam. The inspirational quote for today, guys: whatever it is you do today can improve all your tomorrows. That is how simple life works. If you decide not to do anything today, you won't see any improvement of all your tomorrows. Your tomorrows will probably be the same. If you decide to do something different today, to shock the cycle, you will probably send a signal to all your tomorrows to keep adapting and changing to that new you. So it's very important that you understand that whatever it is you do today, try to do it with full passion. Try to do the things that are your passion. Try to change into that life that you want to change. Try to take that first step. Because whatever it is you do today might change all your tomorrows. Your tomorrows could become even better than your days today are, just because of everything that you do today. So try to do everything today with a smile, with love, with passion. Everything that you're doing in your life, all the time that you're spending, your precious time, the most valuable asset is time, should be focused on those things that you love, on those things that you want to grow, on those things that you want to explore. That very precious time should not be spent on the things that you're doing already and that you really don't like. If you keep spending your precious time to those things that you don't like, that will keep growing. Shift your attention to the things that you do like, because everything that you do today could change all your tomorrows. That was the inspirational quote for today, guys. I hope you really enjoyed that one. If you did enjoy the whole video that I created as a non-financial advisor, again, nothing is a financial advice, but if you did enjoy this video, please give the video a thumbs up, share with your friends and family, subscribe to the channel, hit that notification bell, and leave a comment. What do you think about the news? What do you think about the charts? What do you think about the inspirational quote? What do you think about the fact that I am not a financial advisor and still creating amazing content for you guys on YouTube, X, Rumble, Instagram, and all other socials? Let me know down below. Bam!